everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and I gotta say, I am completely dumbfounded on these markets. Just when you think things might slow down, that we might have some tension, some Middle East issues, or some presidential tweet that sends the markets reeling, we just continue to surge to all-time highs. Last week was phenomenal. We saw the S&P up over 2%, Nasdaq breaking 5% as tech continues its unbelievable surge. More and more people, including myself, are jumping on that bubblicious kind of freight train. But remember, markets can remain irrational longer than you can remain solvent. So right now, the trend is your friend until the bend at the end. Let's see what might be driving or changing that trend this week. We'll start things off with our earnings calendar. There's a ton of them, but not into the major names we saw a couple weeks back, like the Magnificent Seven. But we do have 1,214 companies to speak of. Starting things off on Monday with CEG, that's Constellation Energy. You have Simon & Property Group. Circle, the stablecoin issuer, which has been getting a lot of positive action because of what's going on with the Genius Act and the Clarity Bill. And then you have Fox. Moving on to Tuesday, you've got FNV, that's Franco-Nevada, the silver royalties company, and JD.com. Wednesday brings you Cisco, Alibaba, and Sony. Thursday, you've got Applied Materials, and Friday, you've got nothing but a giant goose egg. Now, what might derail these markets, or what might continue them surging higher? I've done a lot of research recently, and what I do is I build out a table. And that table is all the different information that the Federal Reserve will be looking at, the important stuff, the important things like CPI, PPI, core PCE price index, unemployment rate, and GDP. Now, of course, GDP is not an important one. They're not supposed to be looking at that, but I'm sure it weighs on their decision. Why do I look at that? Because it's the Fed's rate announcements that really is going to steer where these markets are going. And this week, we do have a couple pieces of information dealing with inflation, which I think are very interesting. We start things off on Tuesday. That's going to be early in the week with the CPI numbers. Now, this one is of interest because we saw a massive spike on the last reading of CPI. As you can see on this chart, going back into 2023, 24, 25, and even 26, we really didn't get above 0.5. And all of a sudden, we had that 0.9 reading on the hard red edge of your chart. That is scary. That is a really high spike in inflation. Of course, a lot of that probably having to do with anticipation about the oil prices causing such a spike in overall prices. Now, the expectation is right now that we're not going to come out at 0.9 for the next reading. We're going to come out at 0.6, which is still significantly elevated and of concern. But what else is important? CPI is great, but PPI is what it costs producers to make baskets of goods and services. And you can see here the last 4 months, we've been at 0.5 or higher. Expectations are we're going to come out at 0.5 yet again. This to me is pretty concerning because it does mean that we have elevated levels of inflation. The higher inflation starts to go, the more likely we're going to see the Fed raise rates going forward. And as it stands, at the recording of this today, there's about a 16% chance of a rate increase by December. Now, granted, that's a long way away. Who knows what's going to happen by then? But at this moment, it's transition because it was earlier on this year and actually tail end of last year, that we're going to have a couple of rate cuts to stimulate the market. And of course, that's what President Trump wants. And we'll talk about Kevin Warsh here in just a second. What does the Fed do? Right now, it looks like the pressure is on them to keep rates where they're at and possibly raise if this situation gets much worse. Now, let's look at another piece of economic data that may be steering our markets. We will be looking at retail sales. That's right. What is consumption like in the U.S.? The recent spike we had last month was great. 1.7% increase, meaning more spending, more consumption, more demand. Let's drive markets higher. Let's get more job creation. Let's get people working. Well, what do we have? The expectation right now is we're coming out at 0.5, which would be a significant decline from that 1.7% spike, but pretty much going back to what we saw the month before. You can see that little blue line. I'll put an arrow on to highlight it for you right there. That is where we were at 0.5 before. Now it looks like we're going right back to that. So, that 1.7, which is so nice, maybe disappearing. And last, definitely not least, if you were part of the Trading Academy community, hopefully you joined Larry Jacobson and Bill Addis and myself a couple weeks back as we did a special for our XLT General Session. I would encourage you to go check out that recording if you missed it, where we talked about the transition from Jerome Powell to Kevin Warsh and what that might look like. Well, this week is a pretty important one because we get that vote to see if he in fact is going to get and approve that nomination. That will be tentative for Monday. I don't have the exact time right now on Monday, but right now it is scheduled to go to vote on Monday. Most likely he is going to be confirmed. Then we start the process of transition, removing Jerome Powell as chairman. He will now still be a voting member of the Federal Reserve, but he just won't be the chairman of it. Kevin Warsh, who of course was nominated by President Trump. There's a lot of interest in this, whether Kevin Warsh will be independent and do what the market and his job is supposed to do, or if there might be some political pressure from the president and other parties to push him to move rates in a specific direction. Of course, Trump wants these rates lower and lower and lower, and I think markets would love it too. It just might create some more problems going forward and maybe a conflict of mandate for the Federal Reserve. So it's going to be very interesting to see not just the vote. I think the vote is pretty much a foregone conclusion, but when he is in place, it's like having a new CEO of a company, right? Things may be run differently. The way that information is released to you and I may be done differently under Kevin Warsh. So we'll have to wait and see how that transpires. All in all, I'm pretty excited for it. I think it's going to be an interesting transition. New people, new action, new market movements, and more volatility, which is something we should all be happy about. That, my friends, is your Monday Morning Must-Knows. We will see you next week.